friends, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the quick stock market analysis show where we understand what happened in the market from the technical charts and then try to plan for a better trade. And that's for February 1st, Thursday 2024 tomorrow. So we have a big event, confluence of events basically. We have a budget outcome that will come tomorrow, although it's an interim budget, it's a budget, union budget, and there's a Fed rate meeting outcome that will come tonight or tomorrow, and there is a weekly expiry on the Nifty that's happening. So big day, and are we ready for the volatility? Do we know how to handle this? Let's try to figure it out. Yeah, the market grab up here. We'll look at this after a while, but let's just deep dive into the charts to begin with. Look at the candlestick on Nifty. It's a piercing candle. It's a bullish. It is a bear trap, and it's a piercing because it's moved more than half of the red candle after making a low below the red candle's low. It's bullish in nature. Very volatile markets. 400 points up, 200 points down, then again 200 points up. Very volatile naturally because of the events that's confluencing tomorrow. All this drama is because of the events that's happening tomorrow. So bear with that. Banknifty is also a bear trap. It's wide range bullish engulfing candle, and it has cleared the 100 exponential moving average as well. Now if you look at where it is placed, Nifty has been retracing 4.5% towards the channel bottom, and then reversal starts for 5 days, and then trying to move out of that box pattern towards the top of the trend line channel, and it has moved above the 20 exponential moving average as well after having lost it again, previous day having gained it again. So it's very choppy. Bank Nifty has breached the blue color top channel and then went to the yellow channel. Now it is trying to enter that back into the blue channel, and it has succeeded that, but it's still below the 20 and the 50 exponential moving average, right? So the aim for that would be to move towards the top. If it managed to break out of this box zone and moves about the 47,000, it would probably maybe trying to move towards the blue color channel in the top, which it slipped from, right? So that may be what is happening. Let's try to understand support resistance levels, although it's a very eventful volatile day because of the psychologies that comes into play on such days where huge bets and huge mistakes happen. Things may not turn out to be what the technical analysis may say, so you have to be aware of that. You may go for a toss on such major event days, so be aware of that. So the levels to watch is similar to what was yesterday's. 21,850 would be the box breakout zone, so that's a major resistance, and after that 21,969 would be the gap resistance, and after that 22,000 is a big rounding number, and after that 22,124 would be the all-time high. So it's all resistance on the upside. Downside 21,500 would be a good support rounding number, and then 21,300, 350 would be 23 retracement Fibonacci levels, and then after that 21,100 would be 50 exponential moving average as well as previous lows. So that zone is going to be heavily supporting you along with the gap at 20,950. So that's a very good support zone. If that's breach, it goes to 2,700. Right. So 21,000 is what we'll have touched for the downside, and then 22 for the upside, or maybe new all-time high. Right. But there could be resistance in some supports likewise what we discussed. But in the Bank Nifty, if you see, the first thing would be to take out this 46,300, which is 20 and 50 exponential moving average, and after that you would have some resistance at 46,500 because it's a previous breakout zone. swing high, you can say, and after that 47,000 will be a Fibonacci retracement zone, and it's a rounding number as well, so there could be resistances there, and after that it's 48,000, which is a gap resistance downside. 45,000 could be a major support, and after that you would have an exponential moving average at 44,629, right? And after that 43,960. Before that 44,000 would come in as support. Then 43,231 previous swing low, if that please. Then after that it could be 42,200. That's all the downside. So make a lot of these support resistances levels on the Bank Nifty as well. Now just quickly summarize it up. So we are close about 21,725 on the Nifty, and about 40, just below the 46,000 on the Bank Nifty. Nifty has claimed the 20 exponential moving average, but Bank Nifty is still to claim 20 and 50 exponential moving average. It's just close below that. We had a 200 points loss yesterday, 200 points gain today. So it's 0.95% gain, 1.39 on Bank Nifty, 629. Remember, we are having a 31% rally earlier, but we had a retracement of only 4.5 on the Nifty. We had a deeper cut of 8.5 correction after 26% rally in the case of Bank Nifty. Intraday it was small down move in the Nifty, and then from the tip it reversed, and then it was trending up almost for the day. Bank Nifty, just small tip, and then it was trending up and until it went range bound the rest half of the day. There was some resistance, but yeah, so that's although it was a good green day, you can say. Now institutions come in, the Fyers have come in as buyers, 1,660 crores of buying in the cash market. Remember, it had been selling for 7 consecutive days except on one day of buying. That's only 110 crores or something. But 35,000 crores of selling was what Fyers are doing. Now, ahead of this major event outcome of Fed, the Fyers have turned into buyers is positive. He is also buying today. 2,500 crores of buying has happened. They were buyers since last 5 days, the 6th day of buying consecutively. So, institutions coming in, buying and holding the market up. That's good news. Resistance support levels we already seen. Momentum, if you see, the good thing is that Bank Nifty has retained the sideways momentum after and climbed from the bearish zones into the sideways. That's positive. Then both of them are sideways and rising up. So momentum is trend. It remains in the bear, but it is falling. When the bearishness is falling, that means it can cross over. So that's about the momentum of the trend. India VIX flattish close. Yesterday it was moving up, spiking up, and climbed about the 16. It maintains that today also. The reason for the 16 is, you know, that's a fear in the market ahead of this budget and Fed outcome and all that, right? It will cool off once the events are over, but if it's not cooling off, that means we may have trouble if it's heading towards 20. Be cautious, especially if you're in options derivatives. The study of the Bollinger Bands indicates that the sideways moves now. It's clearly visible on the Bollinger Bands of the Nifty, which indicates that, you know, it may be sideways for some time until that band tops or bottoms are reached. Now downside expansion is still seen on the Bank Nifty, which indicates that hold down mode can be formed. This is on the daily charts on the Bollinger Bands. So technically, market has lost the momentum and the trend. Obviously, it's trying to regain that, but it's not confirmed. It's still sideways, and yeah, and retracement is, you know, also variant. Good amount of retracement is not kept in the Bank Nifty, less than 10%, near to 10%, I can say, but only 5% less than that if corrections happen on the Nifty. So more corrections maybe do there, you never know. But the Bank Nifty is once again breaching the 200 EMA and unable to cross above the 20 exponential moving average and remain there, then we have trouble. All that is going to be clear tomorrow, how the market is reacting to the event. Right, so it's a confluence of multiple things. On these days, the wall crush will happen only after the event, so you trade cautiously. The premiums in the options will all spike up normally high, and then, you know, all of a sudden they decay. So that's why you have to play in the option selling or the buying. Likewise, be cautious. If you're not aware of that and then apply the old same strategy in other days, you may get into trouble. If you look at the major institutional indices, it's all green today. All are green, and if you look at the momentum, except the IT in the middle, all the other major indices are on bullish zones. Similarly, the heavyweight stocks that contribute maximum to the best are all green close today. In few line sizes, they made it in the bullish momentum and it's all sideways. And HDFC Bank and ITC are the bearish momentum after the result outcome. So we have all the mixed bag. 3 stocks are holding the market, others all sideways, and 2 stocks are in the laggard list. Using dice are showing some kind of consolidation flat on the top. Well, Rumble had also highly less like ours and it's consolidating at the top. Dollar has fallen, rupee is remaining weak and consolidating at the very top. Crude oil has fallen after it attempted to spike up a little bit from the 70 levels upside, but it's again red there. Gold is showing some green at the top. It's consolidating at the top after having made all-time high recently. Yeah, so I would say if there is a dip that's happening, there is opportunity for the investors to put in their money in the quality stocks for the long term in a SIP mode. For the traders, direction is what matters, and we'll see if direction comes in tomorrow as it comes from sideways. Yes, small crash, as I said, would happen, so we'll have to trade and put your strategies accordingly. Long strategies and triangles usually work on such days where outcome can be big on either of the sides. So long strategies usually tend to work, right? But be aware of the wall crash that could happen and the abnormal premiums ahead of that. If you're an option seller or buyer, you'll have to play accordingly. Hope you are aware of. If you're not aware of wall crash and all that, check out the playlist on the options videos and then we'll give you an idea. Nifty has a weekly expiry tomorrow. The option levels are 21,500 and 22,500. 1,000 points range, 1 day ahead of the expiry. That's too wide because nobody has too much of clues on where the price will move following the outcomes. But the put call ratio is 0.77, which is bearish in nature. Be aware of that. That's all I have. Play it safe. It can be very volatile. Manage your capital. Have tight stop losses. Get out. Have alternate accounts also if you want. If there is some big crash or some big super that's happening, and if you have an alternate account, you could take counter trades and then manage the situation. Such big event days, it's better to stay out of the market until it's over. That's the safest thing. But if you have to trade, then you have to make sure that you manage the risk properly. That's all that is there in our hands, not technical hands. So play it safe. If you're not subscribed and watching this, please subscribe and share with friends and colleagues, and also put in your feedback, comments and all that, and hit the like button if you like. Okay, that's right, and thanks for watching. Happy trading, happy learning, happy investing. Bye bye.